most people are gonna tell you that student loans are never worth it. They'll say things like college is a scam, student debt is gonna ruin your life, and that student loans in general are just a trap. And honestly, if you listen to some of the horror stories online, I get it. Like, we hear these stories all the time on Twitter, on TikTok, where people are constantly struggling with student loan debt, talking about how they are hundreds and hundreds of thousands of dollars in debt. They're struggling to find jobs and they're paying off on these predatory student loans for decades. But here's the thing that most people tend to ignore. It's that student loans themselves are not the trap. It's how they're being used. And in some cases, yes, they are predatory, but it really just depends on why you're taking the loan out and how you're gonna be using it. The real trap, and you will hear this over and over, and I'm gonna try my best to not beat a dead horse, but also at the same time make a point that actually resonates with some of you guys, is the reason for your investment. Because in the right situation, student loans could actually be one of the highest returning investments that you make in your life. So in this video, I wanna break down 3 specific things: when student loans actually make sense, when they become financially dangerous, and maybe go through a simple framework that you should be going through yourself before you take out a single dollar on your education. Right now, the narrative is too simple. Student loans equal bad. And to be fair, like I said, I get it. There are real reasons that people believe this. In the US right now, student loan debt is over $1 trillion. And candidly, there are graduates out there that are paying off their student loans 20 plus years after they've graduated. And we already know that these private institutions that are giving out student loans are in fact predatory and they are trying to take your money. But let's ignore that for a second because we know all those things to be true already. And I want to specifically talk about how can you use these student loans to be beneficial to you and when does it make sense? As an 18-year-old, no one really explains to you the idea of what the return on your education is going to be. You really don't have all of the facts and the matters there in front of you to make that sound decision. And so you probably never even thought about what the return on your specific education was or is going to be. So naturally, online sentiment then goes from student loans can be risky to student loans are a trap. But honestly, it is a oversimplification. There's so much more nuance to it. So like I said, ignoring the fact that we already know these things are predatory by nature, ignore that for just 1 second, then the problem itself isn't the student loan. It's the fact that you might have made a bad investment decision on your education. Think about it in the same way that if someone takes out a business loan and their business is really, really successful, you're not gonna hear that person saying that this business loan was a scam. Like your parents, if they took out a mortgage 40 years ago and their house is appreciated an insane amount, are they gonna tell you that their mortgage was a financial trap? Probably not, because they've done really well on their house. Debt by itself is not necessarily the issue here. And like people think about it in investment banking, leverage can multiply your opportunity or multiply your mistakes. And so I think there are very rational reasons when student loans can make sense. I think the first and most obvious one is when the degree itself has a really strong return on investment. For example, degrees like medicine, engineering, accounting, finance. Think of those as industries where your career potential and more specifically your salary potential is always going to be really high. These careers often require some sort of formal education, whether that's a bachelor's degree or even a master's degree. And depending on the university that you go to, while these degrees could cost tens, 20, maybe even up to $100,000, think of your lifetime potential amount of money that you're going to make. So for me, for example, in my undergrad, I studied electrical engineering. The total cost of tuition over the 4 years that I was at my college, let's just estimate $15,000 a year. So call it $60,000. Now, for the sake of this example, let's just ignore scholarships altogether. Let's even bump that number up to say $75,000. So in my case, I started off my career making $77,200 as my starting salary. Let's just say that your salary goes up by a very conservative 3% a year over the course of your career. Maybe you even want to retire early and you only work for 30 years. Well, okay, over the course of 30 years, your salary is going to go from that 77 all the way up to over $180,000 per year. That means your lifetime earnings almost $3.7 million over 30 years. Now, I know that's not including taking taxes out and things like that, but you understand my point. And to be fair, this also isn't including any promotions that you might get. Now, you might be asking yourself, well, you mentioned medicine. Doctors have to go to school for much, much longer. You're absolutely right. But doctors also don't start out making $77,000. They're probably making at least double that. So even if you go to med school for 4 years, maybe your total debt when you graduate is $300,000. maybe even more than $300,000. And let's just assume a ridiculous interest rate that makes you pay double that over your lifetime, right? Maybe you have to pay off $600,000 in student loan debt because you chose to be a doctor. And please correct me in the comments if I'm wrong and you live here in the US. Well, if you start at 150 and do that same 3% increase every single year, you're not starting your own practice, you're not getting any promotions, over 30 years, your lifetime earnings is over $7.1 million. So 600,000 doesn't sound that bad. And so that begs the question, when is the debt actually reasonable? And there's really no hard and fast rule that tells you when that debt is reasonable, but I think a good just starting point is if your total debt is less than your starting salary in your first year. So when you graduate, if you think your starting salary is going to be about $70,000 a year, maybe you can manage $40,000 in student debt. I actually think $40,000 is manageable at a lot of public universities that are giving out some scholarships. But at the same time, if you choose to go to a private university that's charging $80,000 a year in tuition, and then you still have that same $70,000 job, well, okay, then maybe that $280,000 in debt that you've gathered up is not as manageable. And I hate to say it like this, but that's where the problem starts. But I do think it's an important distinction to make because I see a lot of people give up on really great opportunities like pursuing investment banking, for example, because of the student loan. People don't want to go and get their MBA. People don't want to go to law school because they think the loans will be too much to handle. But I'll walk you through my math. My MBA cost in total $140,000 over 2 years. Of that, I got about $30,000 in scholarships, so my loan amount, my loan balance was $110,000 when I graduated. Now, at the same time, my first job out of my MBA was investment banking associate, and the starting salary was $175,000 plus bonus. And so investing those 2 years into my MBA, I more than doubled my salary as an engineer. And while still a crazy large number, I put myself in a position where I felt like I could manage that $110,000 of student debt. And this year will be 3 years after I graduated from my MBA, and I'm about halfway done paying that debt off. I think I have maybe $50,000 remaining. And that's my point in saying all of this is the education, the MBA, the law school, the medical school, the master's degree in general. These things unlock so much potential in terms of your career earnings. So don't give up on that just because the student loan number looks really high. And of course, these things provide more access. The MBA provided me access with a bigger network of people, a network of individuals that are so much more successful than me, that are in a higher tax bracket than me, but you learn from those things. And those are all things you should consider when thinking about that student loan and specifically about that education. It's kind of like paying for access. But don't get me wrong, student loans are dangerous if you don't think about them properly. They are predatory by nature, and these private institutions especially are trying to take your money. And when you don't consider your total potential career earnings, that's when you start getting into problems. But you're here watching this video right now. That means you're already thinking about it right now, which is a great starting point. And this is not me standing on my high horse being like, oh, investment banking, finance, engineers, those are the only types of jobs that are worthwhile to go to college. No, that is not what I'm saying at all. What I am saying is if you are really passionate about a degree, but realistic that that degree maybe has lower potential lifetime earnings than some of these other ones that I've mentioned in this video, take that into consideration when taking out your student loan. Like I said, go to a public university, try your best to get scholarships, work a part-time side job to help pay for that tuition. And that way, following your passion doesn't crumble your financial future. Banks will happily lend you money, but that doesn't mean you're guaranteed a salary after you graduate. At the end of the day, if you want to think about it as an investment banker would, student loans are a form of leverage, and leverage can be really powerful if used correctly. Think about it in real estate. Real estate investors use leverage all the time to then multiply their returns. Same with entrepreneurs. Get that business loan. That's leverage to start your company. And in the exact same way, students should use leverage responsibly for student loans. And like I said at the beginning of this video, if the investment is strong, leverage will accelerate that. The investment's weak, leverage will make it crumble. So the real question isn't necessarily are student loans a trap? The real question is my education, what I want to pursue, worth taking out a student loan for? Because education can be one of the best investments that you make, but only if you treat it like an investment, not just the next step after high school. If you guys liked this video and this was helpful, make sure to smash that like button down below and subscribe to the channel Finance with Jerome. As always, I'm your favorite ex-investment banker, Jerome, and I'll catch you guys next time. Peace.